I think that takes a certain amount of what an old Omaha friend used to call uncommon sense. He used to say there is no common sense. When people say common sense, they mean uncommon sense. Part of it, I think, is being able to tune out folly as distinguished from recognizing wisdom. And if you just got whole categories of things you just bat away so your brain isn't cluttered with them, then you're better able to pick up a few sensible things to do.
Yeah, we don't consider many stupid things. We get rid of them fast. And in fact, people get irritated with us because they'll call us, and when they're in the middle of the first sentence, we'll just tell them forget it. And we can see it coming. And that's the way actually the mind works. There was a great article in the New Yorker magazine 30 years ago or so, a little more than that. It was when the Fischer-Spassky chess matches were going on, and it got into the speculation of would the humans being able to take on computers in chess. And here were these computers doing hundreds of thousands of calculations a second, and they said, how can the human mind, when all you're really looking at is the future, the results from various moves in the future, how can a human mind deal with a computer that's thinking at speeds that are unbelievable? And of course they examine the subject some, and a mind like, well, in fact all minds, but some much better than others, but a Fischer or a Spassky essentially was eliminating about 99.99% of the possibilities without even thinking about it. So it wasn't that they could outthink the computer in terms of speed, but they had this ability in what you might call grouping or exclusion, where essentially they just got right down to the few possibilities out of these zillions of possibilities that really had any chance of success. And getting rid of the nonsense, I mean, just figuring that people start calling you and say, I've got this great, wonderful idea. Don't spend 10 minutes, once you know in the first sentence that it isn't a great, wonderful idea. Don't be polite. Go through the whole process. And Charlie and I are pretty good at that. We can hang up very fast. Right?
Well, there you have it. All you've got to do is go at it in the way that Vasily Smyslov did when he was the world champion and of chess, and just do the same thing in investments.
At least in my case, I haven't been continually learning in terms of the basic principles. You always learn a little more about given techniques, or I learn more about some industries over time, and therefore maybe I've widened the universe in which I can operate, although more funds narrows it back down, unfortunately. But I know more about businesses than I knew 20 years ago or 40 years ago. I haven't really changed the principles. The last change, the basic principles are still Ben Graham. They were affected in a significant way by Charlie and Bill Fisher in terms of looking at the better businesses. But I didn't leave Graham behind on that. And I really haven't learned any new fundamental principles, but I may have learned a little bit more about how business operates over time. And there's really nothing. I mean, you ought to get a investment framework that comes straight from, in my view, from the intelligent investor and from Phil Fisher, more from the intelligent investor actually. And then I think you ought to learn everything you can about industries and businesses where you think you have the ability to get your mind around them if you work at them. And with that arsenal, you'll do very well. And if you've got the temperament for the business. Charlie?
Yeah, well, of course, I've watched Warren all these decades, and he's learned a hell of a lot, even the last 20 or 30 years. So it's a game of continuing to learn, and he can denigrate this little frou-frou that enables him to pick the biggest oil company in China or this or that. But those basic principles alone that he knew a long time ago wouldn't have given him the ability to make the recent investment decisions as well as he's made them. It's a lifelong game, and if you don't keep learning, other people will pass you by.
I would say temperament still is the most important, wouldn't you, Charlie?
Yes, of course. Yeah. But temperament alone won't do it.
No, temperament alone won't do it.
You have to have the temperament and the right basic idea, and then you have to keep at it with a lot of curiosity for a long, long time.
But you don't have to be have any blinding insights or have a high IQ to look at a PetroChina, for example, and
No.
when you get a company that is doing 2.5 million barrels a day. That's 3.5% of the world, or 3% of the world's oil production. And they're selling based on U.S. prices, using WTI, as West Texas Intermediate as a base price, and where they have a significant part of the marketing and refining in a country. The tax rate's 30%. They say they're going to pay out 45% to you in dividends. Don't have unusual amounts of leverage. If you're buying something like that at well under half maybe a third of what comparable oil companies are selling for, that's not high-level stuff. You have to you have to be willing to read the reports. But I enjoy doing that. But you wouldn't say that requires any high-level insights or anything, Charlie?
Well, when you were buying that block of stock, nobody else to speak of was buying.
Thank heavens.
The insights can't have been all that common.
Obviously, there are a few smart, honest people out there running funds, and they will do quite well. But if you buy them across the board, in my view, you're going to get a bad result. Charlie?
Yeah, why would you want to invest with a guy whose basic thought process runs something like this? If a second layer of fees on top of a first layer of substantial fees is good for an investor, then a third layer of fees must be better yet. Why would you invest with somebody with a proposition like that?
It's just the idea of taking 2%, plus percentages on top of that. That reflects, it may be what the traffic can bear, Collis P. Huntington style, but that reflects an attitude toward people that we tend to regard as partners, investors. I think it's a basically unfair type of arrangement, and I don't like getting in general. I think it's a mistake to get in with people who propose unfair arrangements. In effect, they're probably getting 4 times standard fees to begin with, and then on top of that, they say, well, we want part of the action, and I would guess in many of those cases that they don't have all of their own money in the fund themselves. Maybe they have a substantial sum outside. Charlie and I both ran partnerships in the 60s and 50s with me and into the 70s with him that would generally be classified as hedge funds. They had the compensation arrangement somewhat similar, although not like they are now. And we did they had some similarities, but I don't think we had quite the attitude toward the people we were trying to that were asking to join us that the present managers have. It's, as Charlie said, the fund-to-funds type stuff. It's really sort of unbelievable, just piling on layer after layer on costs. It doesn't make the companies that are underlying these stocks they buy any better. And believe me, people don't become a genius just because you walk into some office and it says hedge funds on the door. What they may be very good at is marketing. In fact, if they're good at marketing, they don't have to be good at anything else.